If you give me just a few minutes of your time, I'm going to show you step by step exactly how basically anyone out there with just $5 per day can invest into a tried and true, almost bulletproof, long-term dividend growth ETF and turn just $5 per day into a massive portfolio that pays you a ton of cash flow every single quarter. Now, all I ask is that you watch this video in full, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first off, before we go through and I show you how just $5 per day into a tried and true dividend growth style ETF like SCHD can turn a tiny portfolio into a portfolio that compounds over the years. I want to make it clear that you can do this with many different stocks or ETFs across the market. It doesn't have to be SCHD. And as you can see right here, I own plenty of different dividend paying stocks and ETFs across the market. And that's because I simply believe in diversification and I have an interest and have an exposure into multiple different things throughout the markets. Now, for this video's sake, we are going to be using the Schwab US Dividend Equity ETF as an example, which I currently, as of right now, have around 655 shares of this one, which I personally have been collecting over the last few years. But now to get right into it, the reason we're choosing this specific ETF for a portfolio that's going to have a $5 per day budget in purchasing fractional shares, simply because this ETF has a history of moving up as far as share price goes, and also this ETF tracks an index focused on quality and sustainability of dividends. But on top of that, the stocks within this ETF have a history of paying dividends and more in dividends over time, which is going to be crucial in manufacturing a portfolio that's going to grow like crazy long term. Now, to give you some of the stats for SCHD, for example, in practice, and to see the potential of what an ETF like this can do to a portfolio long term, over the last 13 or so years, this ETF has basically tripled as far as price return goes. It's up around 217% on the max time frame, but on top of that, this ETF offers investors around a 3.6% starting forward dividend yield. And as you can see right here, this ETF has paid investors more and more in dividends long term. Now, this might be one of the most crucial aspects of trying to build a portfolio with a relatively small amount of money. We're talking just $5 per day, which again might or might not be a lot of money or not a lot of money to you, but still a $5 per day budget is relatively small. But the reason a $5 per day budget into a high quality dividend growth ETF like this has the chance to compound a portfolio significantly is because this ETF, historically at least, has paid more and more in cash flow to investors long term. To give you an idea of how this actually has worked in practice, let's go 10 years ago, more or less, this ETF was paying around a quarter per share per quarter to investors. Now, 10 years later, this ETF is paying around 82 cents to investors, 61 cents to investors, 74 cents. So just over the last 10 or so years, this ETF is not only trading over triple the share price of what it was trading 10 years ago, but also it's paying investors more or less 3 times as much in forward dividend income, which is outstanding. But at this point, you're probably saying, well, SCHD seems pretty bulletproof. I get it. It's a high quality dividend growth ETF that has a good track record, but how in the heck is just $5 per day going to make me rich later on? Well, let's go through the numbers together on this dividend calculator and start off with $2,500 of starting principal and $1,825 added on top of that per year. Now, $5 every single day of the year is 365 times 5 or $1,825. And of course, I always say this in my videos, 2 things. For one, you should definitely mess around with some of these online free dividend calculators. Type in some of your own situations, numbers, because it's a lot of fun and extremely motivating to do. But number 2, if you add more annual contribution, the numbers are probably going to be bigger. If you add less, of course, maybe you don't have $5 per day, you can of course do that also. But I just wanted to show you that just a $5 per day budget is actually substantial enough to make this portfolio gigantic later on down the line. So we have our $2,500 starting, we have our $5 per day of annual contribution, we have the dividend tax rate of 15, we have the distribution frequency quarterly, because we are going to get paid distributions every single quarter from SCHD, for example. DRIP is going to be turned on, so all the dividends are going to be reinvested. The initial annual dividend yield for SCHD is somewhere around 3.6%. The expected annual dividend amount increase, I showed you guys a second ago how much SCHD has increased their dividends over the years. Over the last 10 years, we're talking around 11%. The expected annual share price appreciation around 4%, 30 years invested. So again, this is probably not going to work if you're watching this video and you're say 60 or 70 years old, but if you're currently in your 30s, this can definitely potentially work. So the numbers are in, and the tiny portfolio from day one is going to be $2,500. So nothing really all that crazy yet, but even with this portfolio at $2,500, you're going to earn just shy of $92 per year in dividends, which isn't horrible. But on top of that, you're going to contribute $1,825 that year, giving you a new balance of around $4,500 year number 2. So year number 2, you're already going to be up to $175 annually in dividends, so not bad whatsoever, well over $10 per month, which is great. Now after year number 2, you're going to contribute that $18.25 or that $5 every single day, which again, most of us, again, relatively speaking, most of us can afford. So year number 3, we're already up to $6,700 with $277 per year in dividends. Now to skip right ahead, imagining you're 30 years old, by the time you're 40, this portfolio could be up to $28,320 and just shy of $1,900 per year in dividends. By year number 15, the portfolio has grown now from $2,500 to now $58,000 and around $5,000 more or less per year in dividends. Now it's going to take around 19 years for the portfolio to cross 6 figures, and at this point you're going to be surpassed the $1,000 per month dividend goal, which is massive. And from this point on, the portfolio really starts to compound, because generally speaking, the way that compounding works, the way that power of compound interest works, the longer you allow the money to keep compounding, the larger it's going to get over time. So by year number 20, the portfolio jumps up $20,000 year over year, and we're up to $15,500 per year in dividends. Now by 25 years in, we're up to $271,000 and just shy of $50,000 per year in dividends. All the way at the bottom, if we were 30 years in, this portfolio could potentially turn from $2,500 if you keep contributing $5 per day the entire time and reinvest every single one of those juicy dividends. The portfolio could be up to $748,000 in value and around $195 per year in dividends. Now, as you can see, from year number 20, the $15,000 per year in dividends, to year number 30, that 10-year time frame, the dividends grew substantially. And that's because the power of compounding, like I said, once it starts to curve up, once the curl starts to begin, things really start to compound out of control, which is why I always say to myself, I wish I would have started investing when I was 10 years old, 12 years old, 14 years old. I unfortunately started investing in my mid-20s-ish, and I wish I would start earlier, because the power of compounding is just that much stronger if you get in a little bit earlier. So it just goes to show that you don't need to have a massive contribution every single year, just $5 per day or a massive starting principal. But by investing into a high quality dividend growth ETF, something like SCHD, DGRO, VYM, VIG, there's tons of them across the market. I'm only using this one as an example because this is my favorite personally as of right now, but there's others I love also, and I talk about them all the time on my channel, so make sure to check out those videos also. But it just goes to show, and I want to prove to every single investor out there, especially those investors that don't necessarily have $10,000 to start with, don't have $20,000 to start with, might not even have a high paying job, it's still mathematically extremely possible to invest a relatively small amount of money into a high quality dividend growth machine like SCHD or others, and turn that small amount of money into a massive lump sum of money that's not only going to grow your net worth, but also pay you a ton in dividends while doing so. But now lastly, most importantly, I want to hear from you guys down below. If you're personally, as of right now, a long-term investor, what ETF or stock as of right now are you trying to build out as far as a core position? As of right now, for me, it's SCHD, but let us know down below in the comments what you're building. If you enjoyed this video, make sure to please drop a like down below and subscribe for future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.